Welcome to episode 2 of the Stoic Trading Psychology Podcast. I am FX Telepath, your host. Happy to have everyone here. I hope you guys enjoyed episode 1. Looking to grow this podcast even more. And in today's episode, we will be discussing what is the best trading strategy. Now, I will kind of set the stage here and acknowledge that there really isn't a best trading strategy, and we will kind of get into that here today. So if you are searching for a holy grail, remember, the Holy Grail is in your own mind. The Holy Grail is not out there. It's not something you can search on YouTube or have a guru teach you that. It's really difficult to say what is the best trading strategy. I will say I'm sure there probably are some that are better than the others. I'm sure that there are some that are a little bit more objective than subjective. We can get into that today, but just want to say, kind of set the stage that, the search for the Holy Grail might not be a search that you should be searching for. You should be trying to create your own strategy, and we're going to talk about that today. So there is a common belief, mostly amongst beginner traders. I've definitely been guilty of this myself too, where they think that there is a holy grail trading strategy. If you look on YouTube, you'll see, I haven't looked at it in a while, but I'm sure you'll see many thumbnails and video titles saying the holy grail or 99% win rate or something like that. When somebody says they have a 99% win rate, they're basically saying they have the holy grail, because if your win rate was 99%, you'd be probably the best trader of all time. You'd probably beat Nancy Pelosi in trading. I'm sure some of you guys will get that joke, but there is no holy grail, guys. I need to get that out right away. In short, the holy grail is the strategy that you come up with yourself. Now, that doesn't mean you have to just open up a blank chart and just create something yourself. There are many different strategies you can use. For example, supply and demand trading, that's what I look at. Support, resistance, SMC, smart money concepts, chart patterns, indicators, a lot of that stuff. Now, I will say that things like chart patterns and indicators and trading trend lines and stuff, that's pretty basic stuff. And I actually personally believe that the bank's algorithms do kind of target those types of systems so that they have enough orders to fill their buy orders, if that makes sense, right? Because if you think about it, if a bank has so many orders that they need to be filled, a ton, millions and millions, the only way they can fill those orders, it's not against trading them against themselves or other banks. They have to be pretty much trading against retail traders, which is us, right? So I personally, I don't really have any evidence for this. I kind of have this gut feeling that their algorithms that they have for their trading platforms or whatever they're doing, I kind of think that they do have an algorithm that targets support resistance areas and trend lines and things like that. And I also will say things like trading indicators and stuff like that, they are lagging, right? When you trade price action, right? Like, let's say there's a demand zone there and you buy the pullback at a demand zone. If that is a lot different than trading like an EMA or an RSI, a lot of those indicators are lagging and it's not really providing real-time input. I will personally state right now that I personally do believe that price action trading, whether it's supply and demand zone, support resistance, whatever you're doing, smart money concepts, whatever, I will say I do believe those are higher odds of winning than just simply buying because an indicator said this or something like that. I think it is a lot better. And now it doesn't mean you can't have a profitable strategy with indicators, right? And what I recommend people do, look, I teach supply and demand trading. You can follow my YouTube channel. I'm sure a lot of you guys are here from my YouTube channel, but that's what I teach and that's what I trade. It's what I love to trade. It's what makes sense to me. I have traded support resistance in the past before. I never really traded any indicators, but it's kind of what clicked to me, right? It made sense to me when it was taught to me, kind of just watching free YouTube videos and stuff like that. So it clicked to me, and it didn't just click, right? I didn't just watch the videos like, wow, supply and demand trading, that works. I went and back tested it. I traded it. I traded it on a very small account. We talked about trading small accounts in the last episode, but I traded on a small account basically as a real-time example to see if it works or not, and it clicked. And maybe supply and demand trading won't click for you. I recently kind of changed up my strategy from just simply supply and demand zones to using support resistance areas as well as supply and demand zones. And it's not that I'm buying a support area, but what I really like to see now is, let's say there's a demand zone, I like to see support created right before the demand zone, because then a lot of the times you will see price kind of stop out all the support traders who are buying at support right into our demand zone. Now, I will also say a supply and demand zone, it's pretty much objectively a large player placing an order at that zone. Is it 100% win rate? Absolutely not. But when you see basing and then a massive rally in price, whether that's a green candle or a red candle, I will say without a doubt that, retail traders like you and I, we can't move the market like that. We can move a market like that in a penny stock or something like that, but in the Forex markets, absolutely not. So when you see those big, massive moves away, up and down, whether it's buying and selling, those are the banks. Those are the large players that are in the markets, right? So I do like that objective reality of supply and demand trading, where something like a trend line, you can't really say that, the bank made that trend line, right? I don't know about that, but again, what I like about the supply and demand trading methodology is that, there is that aspect of, we can't move the markets like that. It's only the big players with the large accounts, if that makes any sense. Now, it doesn't mean that supply and demand is the holy grail. I personally find it the best trading strategy objectively, but it doesn't mean you have to just trade that, right? Like I said, can't even talk right now. Like I said, the combining it together with things can definitely be useful. For example, let's say you trade a bull flag or something like that, which is basically a breakout trade. What I would do in that instance is, let's say you want to trade a bull flag on a 5-minute time frame. What I would do is I would then go to a 1-hour time frame and identify supply and demand zones and just see, are you buying a breakout of a bull flag right into a higher time frame supply zone? Is that what you're doing? Or are you buying a bull flag as we're coming out of a 1-hour demand zone? That would be a higher odds chance of that bull flag working out. I haven't back tested that personally, but that might be something that you might be interested in. If you do that, let me know. Again, all of this revolves around your own testing, right? Just because I say something doesn't make it true. And the issue with this holy grail type, mindset, it's the people on YouTube. And look, a lot of them strategy hop, and they're just trying to make content, sell another course. What I will say is, if I'm promoting some sort of strategy that's different than supply and demand, it is because I truly believe it works. It's not just because, I need to make more content and supply and demand isn't popular anymore, and I need to start talking about this new concept or this new indicator. I will never do that unless I actually have tested it myself and I believe in it. I will just tell you guys that right now. So the Holy Grail, it is certainly, it's a myth, right? There's no ifs, ands, or buts about it. There's many different factors that can make up a trading strategy. You can use support and resistance along with supply and demand. You could use chart patterns with supply and demand. You could use chart patterns with support and resistance. There's so many different methods to trade, and again, it's all going to revolve around your own testing. And probably the most important factor when it comes to trading, let's say, for example, there was a holy grail trading strategy. To be funny here, let's just say you only buy the S&P 500 on a full moon at 1:58 p.m. and you risk and you put your stop loss below the previous day's low, and you're guaranteed to win 100% of the time. Let's say that's the holy grail and it exists, and I'm wrong. Let's say that for an instance, if you cannot hold that trade until take profit, or let's say price is running towards your stop loss and you get scared and you close out the position, it's not a holy grail anymore, right? You have to have the trading psychology along with the strategy in order for the strategy to actually work. Now, let's say you look for 2-to-1s, or let's just say you look for 5-to-1 trades. 5-to-1 trades, let's say your win rate's like 35% or something like that. That's really good. If you trade like that, you're going to lose a lot, right? And you have to make sure that you're not going on tilt. Going on tilt is actually a poker term. For any of you who don't know, I am an avid poker player. I love playing poker. It has absolutely helped me with my trading, and trading has helped me with my poker playing. I am a profitable poker player as well. Am I a professional poker player? I wouldn't really say that, but I definitely am able to exploit weaker players than me. And honestly, with poker playing, it's all about playing players who are worse than you. Like, it's really that simple. You just sit down at a table at the casino or wherever you're playing, and if the players are better than you, then you leave. And if they're worse than you, which you can tell pretty quickly, then you stay. It's really that simple. Anyways, you can go on tilt, right? I could get pocket aces and lose against pocket queens or something, and then I could get pocket aces again and lose and lose and lose and lose. Technically, you could lose forever. It's not going to happen, but on a technical level, it can. So you have to make sure that you do not go on tilt, and I have been guilty of that. Not really in trading, because it's kind of difficult, right? But like, there's been times where, especially when I'm playing online, I don't really play online anymore, and you have pocket aces, and then you lose a hand, or I don't know, you have the straight, and some guy's got a flush, and you lose you lose your whole stack. And then the next hand, you're like, you have some dumb hand like 9-4 suited, and you just raise, and you get yourself into trouble, and you just call, make bad calls because you're on tilt. You do not want to do that in trading, and if you do things like that, it is just going to damage your account. Now, the equivalent to trading is, let's say you have that 5-to-1 risk to reward ratio. You can expect pretty big drawdowns with that risk to reward ratio, like even up to 10%, even more. Looking for a risk reward like that. Now, with drawdown examples, there are average drawdowns that you'll probably have, and then there's also like max drawdowns that you'll have, right? So like, let's say on a 5-to-1 strategy, like your average drawdown is like, I don't know, six trades in a row lost or something. Your max could be like 10 to 12, or I don't know. I don't know the exact numbers, right? But there are tools where you can look into this stuff, and it's just more about expecting that. For another great example is I was just golfing on the weekend, and I shot an 84. I don't know if anybody watches golf or plays golf, but an 84 for me is my best score. Before, it was 85, so it was one less stroke. I actually was very close to an 83, and I shot an 84, and it's pretty much the best round it's the best round I've ever had. So I am now expecting the next time to golf. I'm not being negative when I say this, but I am just expecting to shoot worse, right? Because that's my best round. Maybe I shoot in the 80, in the 70s next time, maybe, but I just kind of doubt it, right? I'm just thinking, basically based on the past, I'll probably shoot in the high 80s next time, maybe a couple times more in a row, and then maybe I'll shoot an 81 or something like that, right? I'm just saying, I'm going into the next round not with high, whatever you call it, like high probability of shooting an 84. I'm not going into it expecting to break 85. I'm really not. Do I want to? Yes. Will I play the same way I did? Maybe not. I'm going to do the exact same things, and it might not work out. I might get a couple bad bounces or something, and it's the same thing with trading. If you win 2 trades in a row, you can't expect to win the 3rd. If you lose 4 trades in a row, you can't expect to win the 5th. You just have to have a system that's in play, and basically trade that system and let it work out in the long run. If you understand that you are going to go through drawdowns in these strategies, it will just become easier. I'm telling you guys, if you, I don't know, in the Stoic philosophy world, there's this concept of, it's kind of wild, but when you tuck your kid into bed at night, think to yourself, he might not be alive in the morning, or he or she might not be alive in the morning. And that's kind of wild to think. I don't know about that, but it's just the idea of not letting anything get to your head or take it for granted, right? If you go on a win streak, don't expect to keep winning. Expect to lose almost every trade, and then when you win, it'll be good, and then when you lose, you're like, wow, I expected that, right? And that's the reality of it. If you go on a massive drawdown and your strategy is not working, okay, maybe there's things that we need to change here, but it's all about just remembering. It's all about keeping that the ups and downs to a minimum. In last week's episode, I talked about trying to have a stable mindset of like not getting too excited, not going from 10 down to 0 and down up to 10 again as far as like a level of emotion. Try to keep it at a 5, right? You lost. Ah, damn, that sucks. I win. Okay, great. That's great. Not like, oh my God, I won. Yes. Or like, oh my God, I lost. Everything is the worst. You don't want to do that. I'm telling you guys right now, I used to be like that. I used to win a trade and I'd put on music and I'd feel like I'm the hot shit of the town, and it doesn't work out. Not because I didn't win the next trade, but because when you lost, you're like, oh my God, what the hell's happening here, right? So it's all about trying to keep that consistent emotion in play, and understanding that it's not always going to work out, and don't expect to win every trade, especially if you have a lower win rate with a higher risk reward. And if you have a hard time losing like that, I challenge you to work on that, but I also recommend maybe finding a strategy where you're only looking for like 2-to-1s, 3-to-1s instead of those 5-to-1s, right? Just to take it to an extreme. Imagine you were looking for 10-to-1 trades. I don't know what the break-even rate on that is. I'm not a math guy, but you're gonna lose a lot, and you have to be okay with that. And not only do you have to be okay with losing a lot, you have to be okay, I took this trade now, and I'm at 7-to-1 risk reward right now. Do I bump my stop loss up? I don't know. Technically, you should be leaving it, right? Or at least putting it at break even. So things like that are going to come into play, and it's very, very challenging. This is not an easy market to be in. I will tell you guys that. So there's just so many different psychology aspects. That's personally why I love trading, and I love talking about it. It's so cool how many different situations there are and how it can really, really test you. So as far as coming up with your holy grail strategy, it depends on what you're trading. Again, I'm sure a lot of you guys are here from my YouTube channel because I did bring it up, and I do appreciate you guys tuning in. I really appreciate it a lot. If you want to be on this podcast discussing trading psychology and your own journey with it, or something, you have interesting things to discuss, please let me know, and maybe we can do an episode. But I do encourage you guys to give me a 5-star rating, if you don't mind. Would be probably help the show a lot. So I definitely it would be much appreciated. But as far as developing your own best strategy, I would try to align it with your personal strengths. Again, if you don't mind losing a lot, having a 5-to-1 risk reward ratio, it's very rewarding, and a lot of times price will go to that 5-to-1 pretty damn quickly. Again, if you have a hard time losing, maybe have a lower risk reward and win more, right? It's all going to depend on your back testing, and I will point you guys in the direction of supply and demand trading, because that is what I know. I'm not going to sit here as a supply and demand trader and recommend that you guys trade trend lines and support and resistance. I don't know anything about that, but what I will say is if you want to come up with your holy grail trading strategy, and if you listen to what I said earlier about the objective truth of when price moves away that fast, that is a bank or large player buying, and we want to trade with the banks, I will point you guys in the direction of using supply and demand first, at least on a higher time frame. So what I recommend is, at least at minimum, use supply and demand zones on a higher time frame. So let's say you want to trade a 5-minute chart. I don't recommend going any lower than the 5-minute chart, so I'm not going to give an example for 1 minute. Let's say you want to trade a 5-minute time frame. What I would do is, at minimum, on your 1-hour chart, learn how to identify supply and demand zones on a 1-hour chart, and just kind of get the bigger picture, right? Because maybe you'll see up top you have a nice supply zone, and down below you have a nice demand zone. Maybe you're in the middle of that. In supply and demand trading, we call that the curve. So if you're near a demand zone on the 1-hour chart, then you're at the low end of the curve. If you're at the supply zone on the 1-hour chart, you're at the high end of the curve, and you should look for shorts, right? If you're at the lower end of the curve, you should look for longs. High end of the curve, you should look for shorts, right? If that makes any sense. If it doesn't, feel free to send me a message on Twitter or Instagram, or email me, and I'll try to answer you when I can. So use that and go from there, right? I'm just kind of giving you guys that I don't know, that first step, that first stage in building your strategy, and then maybe from there, maybe you watched a video on chart patterns, right? We'll use I don't know, like the flag patterns again. They're all kind of the same to me, but again, I don't know too much about them. Maybe you really like those chart patterns, and then maybe only, again, buy the flags at a demand zone, right? And then another thing I would recommend is using trend as well. Try to trade with the trend when you can, at least the trend on the higher time frame. That's, again, I'm just trying to point you guys in a direction that I think is going to benefit you. Let's say you don't want to trade supply and demand, and you already like support and resistance. That's completely fine with me. Obviously, I don't care. Use higher time frame analysis. That is really what's going to separate, the men from the boys, or whatever. And the reason why higher time frame, multiple time frame analysis works really well is not just because, let's say you don't really want to be buying at a supply zone when, let's say, there's a 5-minute demand zone right into a 1-hour supply zone. Maybe not the best idea, right? But if you're buying a demand zone on a 5-minute chart inside of a 1-hour demand zone, it's going to increase your odds because those higher time frame zones are kicking in. not only does it increase your odds of the trade working out because of the fact that it's a 5-minute demand zone instead of a 1 hour demand zone, keep going. It's a 1 hour demand zone instead of a daily demand zone instead of a monthly zone. You can just keep going and going and going, and that increases the odds. But what it can do for your strategy is, let's say again, you look for a 5-minute demand zone instead of a 1 hour demand zone, and that's also in a daily demand zone. And let's say you look for the 5-to-1 trades. You're pretty good at taking losses. You don't mind. You understand the long-term game. Your trading psychology is on point. Let's say you buy that 5-minute demand zone. You look for a 5-to-1. But you've identified that, wow, look at the higher time frames. This thing really could shoot up and there's more profit to potentially be made. Well, what you could do is, instead of just taking full profit at that 5-to-1 risk reward or whatever you do, maybe only sell 75% of your position and have a 25% of your position just as a runner, right? Now, this might not work if you're taking a risky 5-minute demand zone inside of a 1 hour zone. You probably just want to take your profit at a 5-to-1. That's my best advice, I guess. But again, if you're using the multiple time frame analysis with it, there's just so much more money to be made a lot of the times, and you can turn that extra 25% into like another overall 5-to-1, right? Giving you like a 10-to-1 trade, depending. It's happened to me before. It can definitely happen to you guys too. But if you don't use the higher time frame analysis, you're gonna probably get smoked, or you're just gonna give up a bunch of money. That's just my personal opinion. So it's not just about making sure you're buying at a demand zone on the higher time frame. It's about understanding maybe this is a time where you could risk more. Maybe you typically risk 1%, but you realize, hey, this is a 5-minute zone instead of a 1 hour zone instead of a daily zone, all at demand. It's a great time to buy. Maybe that's when you risk 2% or 3% or whatever you feel comfortable with. Again, that's going to rely on your testing as well, but it's just something to consider. And again, I'm just trying to put you towards the right path. Whatever strategy you're using, use multiple time frame analysis. If you're using the RSI, the Relative Strength Index, also known as the really stupid indicator, that's just a joke I've heard from another trader, but if you're using that, use it on the higher time frame as well. Just because the RSI is saying overbought on the 5-minute time frame, maybe it's oversold on the 1 hour time frame, and it's like, what do you do there, right? Well, maybe you wait for it to be oversold on the 1 hour time frame and then also oversold on the 5-minute time frame, and then you're just using the multiple time frame analysis to just kind of give you an edge. Remember, trading is all about having an edge, and your edge isn't going to be that big in reality. I know a lot of people say they have the big edges, but trust me when I say this, those people that you see on YouTube who claim to have 99% win rate or things like that, they're mostly full of shit. I will say that right now. Nothing against them. I'm not trying to start any beef or anything, but they're basically just preying on beginner traders. You'll see it all the time where these people that run these Bitcoin scams, they claim they'll make you 5% a day or something like that. It's so unrealistic. It's way too good to be true. So you have to be careful of those people, and a lot of times they're strategy hopping because they want to keep the content flowing and keep it fresh, get new people in here. They want to have the supply and demand traders, the support and resistance traders, the indicator traders, the chart pattern traders. They want to have all of them on their channel watching so they can sell more courses and make money that way. Do I have a course? Yes, but it's all supply and demand trading. Again, if I ever were to change my strategy up, it would be because I believe in it. I'm personally not going to be changing my strategy up because I trade supply and demand and it works for me. There's no need for me to trade something different. Again, I've added to it using the support resistance trap areas, things like that, trend line traps, things like that. But that's because I tested it and I saw it work really well. And I'm like, wow, that really works. And I added it. So there's things I might add. I might tweak it a little bit, but I'm not going to be strategy hopping. And that's something you don't want to be doing too. Again, I talked about this in the first episode of the podcast. It's okay to strategy hop / test when you're first starting out. If you're an absolute beginner trader and you don't know what you want to trade, try different things, right? Again, I highly recommend you stick to supply and demand zones and higher time frame analysis to start, because I promise you probably will see the power of it. But it's okay if you want to explore different strategies. But for me now, especially as a profitable trader, I'm not going to just start to look at bear flag patterns. It would just mess me up, and I'm not going to do that. It'd probably just kind of be analysis paralysis at that point. Now, if you have tested a system and you like it, and you just started trading it a month ago, and maybe you're break even, or you're down 1%, or you're up 1%. Let's just say down 2%, which is not that crazy. You're going to have losing months, I promise you guys. Maybe at that point, you should not be strategy hopping. Test it for a long time. 1 month is nothing. 2 months is nothing. 3 months is nothing. I've even seen these quote unquote trading gurus on Instagram and YouTube, and I did a live broker login, and it's like, and they showed a statement for a year. Like, even a year is nothing. And like, in reality, they could have just bought on that. They could have had like 10 different accounts and just, had daddy's money before, 10 different accounts, and they just showed you one account. It's that easy to fake. That's why those don't even mean anything. I will give them a little bit more credit than other traders online. But again, what I pride myself in is the fact that you can go back on my YouTube channel and look at my forecast for the past, I don't even know now, 2-3 years. It's all there. I have never deleted one of them. I've only missed a few. I don't do them on Christmas and New Year's because when the markets aren't even moving and nobody's really watching. So I don't do them then. But I've never deleted one. I've never been like, wow, that was a bad week, better delete that. And like, trust me, there's been bad weeks where I'm like, wow, that was a bad forecast. And it's not even that it was bad. It just didn't work out. And like, that's the reality of it. Most people can't say that. There are a few traders who do the forecasts, and I have a lot of respect for them, and I hope that you guys have respect for me for doing that as well. That's really the only way you can gauge somebody's analysis. Live broker logins don't mean anything. I almost want to do an example of make like 5 accounts and just show you guys and put $5,000 each and just do crazy trades, and one of them's bound to work out, and just look at my live broker login and look at my trading statement, because it's not photoshopped. It's really not. And it's just, I don't know, it's so easy to fake things. So be careful who you're following out there. But again, test different things, guys. There's no reason not to. There's nothing wrong with trying out new things, but the goal, remember, is to come up with your own system. And I will say, let's say you're starting out brand new today, and you're going to say, okay, I'm going to take Kevin's advice, and I'm going to look at supply and demand zones, and I'm going to use higher time frame analysis, but I'm going to explore different strategies and see what I can combine with that to come up with my own quote-unquote holy grail. Try to have a goal in mind of like, I'm going to test things out for the next 6 months, and then the next 6 months, I'm going to trade whatever I figured out, and just trade that for the next 6 months, whether I win or lose or not. I think that's a good plan. You don't want to be doing this for a year. The goal is to come up with a strategy and a system as soon as you can. There's no rush, but it's also, you don't want to be testing things out for an entire year. Again, maybe you do it for 2 months, but it depends on how much work you can put in, right? If you can only spend 20 minutes a day doing it, it might take you a little bit longer. But, I think saying for the next 6 months, I'm going to experiment, back test, get confident, open up a brokerage account, and then the next 6 months after that, I'm going to trade the system that I come up with. I think that is a very, very solid plan to just have sort of a timeline in place so it keeps you from strategy hopping. And then again, what's very important is that you trade that system for the next 6 months or whatever your time frames are. You have to trade that system. If you go into a 10% drawdown, keep trading that system. If you go into a 10% drawdown and you don't have a system, then I would just pull away, and I would pull my money out of the trading account, or just, kind of put it on pause. That's what I would do. But anyways, guys, I feel like that is enough for today's podcast. Let me know what you guys think. Let me know if there's anything I could do differently, the way I'm saying things, the way it's flowing. This is new for me. I'm mostly doing videos, and I want to get better at this. I want to grow this podcast because I listen to podcasts a lot, and I want to have my own, and I want to have you guys on here. So please give me feedback, whether it's positive or negative. It would be very, very much appreciated. I will not take it personally unless you attack my family or something, but give me feedback. I would really, really appreciate it. And if you do like it, I would appreciate giving a 5-star rating as well, and just spreading the word. Share it on your social media, share it to new traders who need help with the psychology aspect of trading. And just, I don't know. I'm trying to be a little bit different here and talk about things that a lot of people aren't trading or aren't talking about. So anyways, guys, check out my YouTube channel as well, FX Telepath for forecasts, and my Twitter, X, whatever you want to call it as well, at FX Telepath. And I will see you guys in the next episode.